You were listening to chartingwealth.com for Monday, the 30th of April, 2018. A big shout out to Patrick this week. Not only did he pre-order our book, he purchased a year's supply of our Trader Journals, and he gave a donation of $30 to the cause. Patrick, thank you so much. We very much appreciate it. If you're interested in pre-ordering the book, it'll be coming out very, very soon when we get it back from the printer. We are so excited about it. It is Charting Your Way to Wealth. It is a full explanation of everything we do at the channel. Many chapters, I think it's 10 chapters on everything from the price percent oscillator, the derivative oscillator, how to draw trend lines, our theories, our two methods of trading, you name it, minor indicators, major indicators, Heikin-Ashi candlesticks, regular candlesticks. We're very, very proud of it and happy to bring it to you. You can pre-order it right now. Please do so. And also the Trader Journals. Remember how we talk about the daily market worksheets, the weekly market worksheets, the trade worksheets? We put all that stuff into one 3-month Trader Journal. It's spiral bound. It is expensive for us to print on 8.5 by 11 paper, cardstock on the front and back, marked up so you can put your name on it, the dates from and to. Just beautiful. Every day gives you the weekly comprehensive review and forecast where you can put in your weekly trade worksheet. You can also, and that means fill it out. It's already printed there for you, already laid out perfectly for you to put down everything that it is you're seeing in the charts. And it gives you the beauty of being able to look back in time and see what you've learned, and also note down the trends that you notice. Certain times of the year, the Qs may do this. You may have noticed a trend that happened and worked for a while. You can find it again in the charts. All sorts of great things, plus tracking your trades, your successes, your failures. I will tell you that starting off, you typically learn a lot more from your screw-ups than you do when you do things right, because when you start, a lot of times you do things right just by mistake. You really learn from your losses. And again, we're talking about virtual losses. So please, you can go to the website, chartingwealth.com, all the daily reviews, comprehensive reviews. There are links there to the place you go to buy the book and buy the Trader Journals. That's it. That's enough of a plug, but we do appreciate all your support. You can also donate there. $30 a month is all we ask. And if you do donate, we give you a special training just for our super friends every month. Now, what's going on in these markets? The S&P 500, we see that it is a doji for the week. Ended on Friday up 0.09%, but we have a doji. Now, we've redrawn our weekly trend line after that prior week ending on the 20th of April. That was a nice up week, and this past week looked like it was going to be a strong down week, and then it pulled back. So again, derivative oscillator losing energy, price percent oscillator is flat, and the market is in a sideways slide. Lots of indecision. We still have a red doji though, so that means tending down. Now as we look a little closer, and don't forget, we're still in a confirmed down move on that weekly chart. Take a look at the 2-day chart. It is in a confirmed up move since it crossed over going up back on the 16th, but after the 2-day candle ending on the 18th, it's really slidden sideways, tending down. The first day of the latest 2-day candle on Friday is a bit of a green up box, but again, still within that sideways slide starting back on, well, almost the 20th. But again, tending down like we see with the weekly chart, although the 2-day is still in a confirmed up move, but it's hard to pattern that. That has since been broken. A lot of times when you see crossings or you see a break in movement on the 2-day and things going back to the weekly trend, that's also something to pay attention to when you see these crosses between the 2-day and the weekly. That's something for you to pay attention to. That's a good, I guess we'd call those trend line crosses on the 2-day and the weekly. That can show things breaking down in an attempted breakout up move and going back to the big chart. So watch those, learn from those, and put that down in your trader notes if you're actually practicing some trade at the time you see one of those occur, or just note it in your daily market worksheet, or now in your comprehensive worksheet, the weekly worksheet. Okay, now to the 4-hour chart, what do we see going on? Well, it's trying to cross over going up. The derivative oscillator has crossed, but the price percent oscillator has not crossed yet. Remember, the movement was up in the morning, a bit of a pullback in the afternoon. That's probably what kept the price percent oscillator from crossing over. So we'll continue to watch and see what we see in the S&P 500. Don't have a trade right now because of the trend line cross and the the pullback. So we'll continue to keep our eye on things, see what we see, keep you posted. What do we see on the Qs? Up 0.06% for the day. And again, not so much a doji as a spinning top. So indecision, not as much as a doji, but again, it's pretty darn close. Tending down after, again, a prior up week ending on the 20th of April. We do have and again, just to note, derivative oscillator losing energy, price percent oscillator still headed down. So confirmed down move. As we go to, that's on the weekly chart. As we go to the 2-day chart, we see the first day of the latest 2-day candle is a green up candle pushing through the weekly trend line. And of course, it's trying to cross it. What we see as far as the price percent oscillator, up on the 18th, down on the 24th, and then trying to move back up again, that tells us that we're seeing a lot of indecision there, as the market is just wacky, going back and forth, again, tending down, but again, not anything to allow us to jump into a trade there. Just remember, the confirmed down move on the weekly is down. We did have the 2-day crossover going down, but then it bounced back up again. So still confirmed down until that 2-day candle closes. So if we have a down day on Monday, watch for it, because on the 4-hour chart, we're getting very close to crossing over the price percent oscillator, very close. Derivative oscillators already crossed over. If you see things bounce off that red signal line, then you might look for a jumping in point on Monday if it ends up being a down day. Why? Because the 2-day chart is in a down move, real close to crossing over going up, so be careful there. And the weekly is in a down move. So again, that's something to watch for on Monday. Watch that 4-hour chart in the morning. And if you see a move over bouncing off the red signal line on the price percent oscillator, you might want to look at jumping in. You also see we're banging up against a pink line, or sort of, I guess that's, I'm not going to get into funky colors. We'll just call it a purple line. That purple line is the 200-period moving average line. And if that is strong resistance and things bounce off of it, then of course, let that be your resistance and look for a potential jumping in point. So keep that in mind on Monday on the Qs. Next, let's go to TLT. We didn't get the crossover we had hoped for. Why? Because bonds were up 0.77% on Friday, so we don't have a weekly vertical crossover going down. Derivative oscillator still in the positive pretty strongly, and the price percent oscillator did not cross over. We do see that this has been a down week and still in a confirmed up move, but very weakly. We don't have a trend line that we can even note there, but we don't have the price percent oscillator crossing over going down. On the 2-day chart, we see it flattening out on the price percent oscillator, derivative oscillator doing the same. And so far, the first day of the latest 2-day candle is an up candle. So have things flattened out and bottomed out? No way to know that. We'll look and see how the next week moves forward. And if we do see a retracement and crossover going back up on the 2-day chart, you might want to look for a jumping in point if one makes itself available. The 4-hour chart has already crossed over going up. It did that in the afternoon on Friday, and that is like 4 up candles, green open box up candles so far. So let's just see if this isn't a bounce, but if it's really something that gets us back into up moves on bonds. We don't know. We shall watch and we shall see, and we shall practice trade if it allows us to do so. Lastly, we look at gold, up 0.42% for the day. And of course, gold has reverted back over to going down on the price percent oscillator and derivative oscillator on the weekly chart. We have a red down candle, the biggest we've seen in a while at the end of the week on Friday, with a bit of a tail, maybe a third the width of the candle heading down. And as we look at the 2-day chart, we can see we had two strong down candles on the 2-day chart ending the 24th and the 26th of April. And then so far the first day of the latest 2-day candles pushing up on the down trend line. The derivative oscillators continuing to gain downward momentum. Price percent oscillator not headed down at the same strong angle, but still headed down. So we'll keep an eye on that. What's the 4-hour chart doing? Looks like it's trying to bounce off a bottom of about 125 or so. So we'll see what that does. It's pushed through the 2-day trend line. It is headed up on the price percent oscillator, derivative oscillator, losing downward momentum. So again, keep your eye on gold. Just remembering, as we say over and over again, all things being equal, market tends to move in the direction of the largest chart, and that largest chart is down on the weekly, down on the 2-day. And when we're looking at that 4-hour chart, it's still down. Maybe you'll get a pullback over the course of the next week and can jump into a down move. Jumping into a down move right now wouldn't be all that smart a move, since the derivative oscillator is losing downward momentum and the price percent oscillator is headed up. So we'll continue to keep our eye on the prize. That's where we are, folks, as we end the week. Thank you again for all of you who've pre-ordered the book. If you want those trader journals, we are quickly depleting our supply of those, but I urge you to order your year's supply now. You do get a discount. I think it's 10% if you order a year's worth. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.